Bitcoin is breaking down, and if this level doesn't hold, the next move could shock the entire market. Hi everyone, Mark here, your returning investor, and Bitcoin has officially broken below its new year trend line, and right now the price is hovering around 90,000 US dollar, depending on when you're watching this. But what is especially worrying, today Bitcoin dipped under 90,000 US dollar for the first time in around 7 months, erasing all its 2025 gains. This kind of breakdown doesn't happen often, and when it does, it usually signals something important. And in this video, we are going to look at why this breakdown is so important, the support levels below us, the resistance levels above us, and what history plus recent flows say what usually happens next in a post-halving cycle. Let's dive in. Okay, guys, you can see Bitcoin has dropped below the long-term weekly trend line that has supported every major pullback since late 2022. That yellow trend line carried the entire bull cycle through the 2023 recovery, through the 2024 halving run, and up to the 2025 highs. And every time Bitcoin touched it, we bounced, okay? Which means buyers stepped in reliably. But now this weekly candle is the first clean break below it in almost 2 years. In addition, on the daily chart, a dead cross is happening right now, and I'm using the 50-day moving average and the 200-day moving average here. And you can see the 50-day moving average is crossing under the 200-day moving average, which is the blue line. And when you combine that with news that Bitcoin fell below 90,000 US dollar today, amid weak macro data and ETF outflows, you realize the weight behind this breakdown is bigger than normal. Basically, this is not just a dip. It's a structural shift. So why this breakdown matters? When Bitcoin loses a trend line this big, 3 dominoes fall. The trend momentum weakens, so those buyers who defended the trend line for months are now stepping back. The signals show the trend may have ended. For example, Bitcoin closed below its 50-week moving average, a signal that previously marked bull cycle ends. And then leverage gets wiped out. Today's crash sees over $1 billion of long positions getting liquidated, and ETFs are seeing large outflows. One report shows November may set a new outflow record. When that happens, it accelerates the downward move and fear takes over. Sentiment is at extreme fear. The fear and greed index is very low, as you can see here, and investors are pulling back, especially around macro uncertainty. For example, delayed US jobs data and government shutdown. Meanwhile, on chain, whales are buying while retail panics. This divergence is key. Okay, now let's talk about the levels that matter most. These support zones will decide how deep this correction goes. The support number one, between 85,000 to 88,000 US dollars, is the immediate support. This is the floor we are testing right now. And if Bitcoin fails to hold this zone on a weekly close, momentum shifts towards the downside. And then we have the support number two, between 80,000 and 78,000 US dollar. So this is a major weekly support. And this is a key demand zone where institutional buyers stepped in last time. And given the current ETF outflows and macro weakness, this zone is increasingly important. Okay, support number three, between 72,000 and 68,000 US dollar. And this is the most important support on the entire chart. It's the previous cycle's high. Historically, Bitcoin loves retesting the prior ATH, after the halving and then launching from there. If price returns here, that could be one of the best long-term accumulation opportunities. In a current climate with outflows, weak macro data and trend line breakdown, it's very real that we could head towards one of these zones. Okay, let's have a look at the resistance levels above us. And for Bitcoin to recover, it must reclaim these resistance levels above the price. So the resistance number one is around 95,000 US dollar. This is where Bitcoin tried to break out last week and got rejected hard. That failure now becomes a major supply zone. Resistance number two is between 100 and 105,000 US dollars, and 100,000 US dollar remains the most important psychological level. Analysts are pointing to this level as the last line of defense before major downside. Moreover, institutions have hedged using options around this zone. So now we go to the resistance number three, between 113,000 to 118,000 US dollar. And this was the previous cycle top. If Bitcoin ever breaks convincingly above this range with volume, it would confirm the next leg of the bull market. But right now, with the sentiment weak and price breaking trend lines, that scenario looks less likely immediately. So what happens next? Every Bitcoin cycle has this moment, the mid-cycle flush, and this one fits the pattern almost perfectly. In every halving cycle, the 2013 had a 50% correction, 2017 40% correction, and 2021 a 54% correction. We are currently around a 20-25% correction from the October peak, which was above 126,000 US dollar. Bitcoin is now below 90,000 US dollars. Importantly, we are only about 18 months into the post-2024 halving cycle. Historically, the biggest exponential moves happen after this kind of reset, usually heading into year two after the halving. The three likely scenario now. Scenario one, deep to the 70 to 80K zone, consolidation, slow recovery. With ETF outflows, macro headwinds, this scenario lines up with current flows. Scenario number two, full reset to the 78 to 72K zone, strong whale accumulation, launchpad for the next major rally. Given trendline break plus macro weakness, this is pretty realistic. The scenario three, it's an immediate recovery, but only if large inflows return and macro improves. Some bullish forecasts still talk year-end targets of 120 to 200,000 US dollars. However, with Bitcoin dipping below 90,000 today and macro clouds gathering, the bounce is unlikely without a catalyst. Okay, now what this means for investors? Here's the truth. Every Bitcoin correction feels like the end of the world, but every correction in Bitcoin's history has turned into an opportunity. Right now, whales are quietly buying while retail panics. Sentiment is screaming fear. Outflows are high. That combination historically equals buying season. Not necessarily now, but when the trend resets. So don't FOMO the bottom, don't panic, sell the top. Staking during red days has always been the winning long-term strategy. Use dollar cost averaging, set aside speculating for your higher time frame portfolio. And remember, guys, this is not a financial advice. Always do your own research. So to summarize, Bitcoin losing the trend line is a major warning sign, but it's also a classic mid-cycle reset. And the real question is, will Bitcoin hold at 85K, or are we heading down to 80, or even the macro zone at 72? Let me know in a comment, what do you think? And if you enjoyed this breakdown and found it helpful, please hit the like button, subscribe, and I'll keep bringing you data-driven crypto insights. I'm Marc Asset. Thank you for watching, and I'll see you in the next video. Ciao.